what I've been telling people for years and years and years who trade stocks, and that is always hold a certain amount of money in reserve for the days the stock market goes down, especially a big sell-off, uh, so that you can buy the dips, and you 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 want to buy in companies that are fairly stable. You don't really have to worry about, so that if it takes a while for the price to come back up, so you can make a profit at it, you won't have to worry. So Coca-Cola, Walmart, stuff like that, stuff that's not going away. It'll basically never go out of business, and if it does, it'll be sold off for a profit, and you'll have plenty of warning before that happens. So your money is fairly safe, and you might even catch a dividend here and there. But for those who are more knowledgeable, have done their research, etc., and can be a little more speculative, like I can, there are certain stocks that I track very carefully, almost on a daily basis, and just bide my time. And for example, Archer Aviation. Archer Aviation is kind of a speculative tech company in the sense that they are building. There's a lot of drone research that they've done, and they basically have built a flying car that in the future may be used as a taxi or something. And they've got units they're selling. They've got prototypes in the pipeline and this kind of stuff. So, whether or not they're profitable right now isn't too much of my concern. You can look at their share price, and it's right now it's $7.33. So we're not talking about Oracle or Google or something like that. This is still a very small tech company that's on the map in a niche market, but it's cutting edge technology. So who knows what it will turn into in the future? They may tank tomorrow. They may be around for 200 years. You never know. But for right now, when it comes to stocks, you got to take your heart out of it and just use your head. And I had like 11 shares of this company just to keep it on my board so I could keep an eye on it. And my average price at the time was like $7.45, give or take. Well, the other day, last Thursday and Friday, when there was a sell-off and the market kind of tanked, that was the time when I struck. So the price went down into 720, 725, whatever, well below my average price at the time. So that's when I bought. So I bought 1,000 shares, more or less. That brought my average price down to 731. And then today we've had this is Monday, we've had a 19-cent so far increase in share price. And that's put me up from my total gain and loss on this stock. I'm up basically $50 right now. So if I put in a sell order right now, I'm in the green, I'm making money. I'm in the black. I'm making money. I think this is going to go up a little bit more than 736. I am going to put a sell order in for sell 740, but not all of it. Probably 800 shares. I'm going to get the lion's share of my money back, and then I'll put in one for like $7.45, and then sell the bulk of it and keep one share just so I can keep an eye on the stock here on my personal board. But I'll make money off this thing. And this is what you do. You buy the dips, and you don't have to spend hundreds or even thousands of dollars. If you've got $100, you can do this and earn a few dollars. Wash and rinse, repeat. Wash, rinse, repeat. Keep doing the same thing over and over with various stocks. Could be the same stock. Pick a Coke or a Walmart or something that that's going to be around and has a fairly stable share price that only varies by, you know, less than $1 every day, and you can still make money off stocks like that by buying the dips and then selling. And yes, it can be tedious, but this is how you build up. This is my fun account. This is not my main investment account. It's my fun account. I started this with $100, and right now it's at market value 68,000 on it. So when was that? 20 years ago, basically, is when I started it with $100. And so yes, you can build these accounts up using that technique. And I'll just show you another example of the other stock that I bought. Well, two other stocks that I bought. I bought a bunch of Oracle because it just went crazy low. It's up 53 cents right now, and it's on the increase, which it should be, because these are crazy low prices for this stock normally. You can see my average price is at 214. So it went down even further after I bought it, but now it's starting to come back up. So I didn't go too crazy with this one. You know, just about $6,000 worth. But this Oracle will come back up. Oracle is the AI and network data centers, this kind of stuff. Oracle powers all the big companies handling all their IT stuff. They're not going away. They are the major force. And the only one that basically doesn't use them is Amazon, because Amazon does their own thing in-house. But basically everybody else uses Oracle in one way or another. So they're coming back. The stock price is going to bounce back. I'm not worried about it. And then the other one I did was quantum computing. You know, that to get AI to work properly, you have to have computing power and data storage, and of course, you know, like NVIDIA chipsets. You have to have all the three of these things, and the quantum computing is the future part of AI. So, but for right now, you have all these AI companies that are gaining a foothold and trying to become profitable. So this is just one of many. So Qubit here, QUBT, Quantum Computing CS. I went in and bought 1,500 shares, and it was much lower than 1086, which it is right now. So my average price was 1085. And this morning, I'll show you here on the chart. This is what it was in the morning at 9:52. So it's just slowly creeping up, and so so it's gained from 1020. So it's gained about 60-70 cents in share price today. And so right now I am in the profit, 35 bucks. So if I sell now, I get my money back and a tiny little profit. But I'm going to hang on. I think this can get up to at least $11, and then I'm going to have I'm going to start staging some sells at that. But again, it goes back to buying the dip. So let me show you the 5-day on this one, and you can see where I was buying. I was buying down in here in this trough, and that lowered my average price down to what it is. So all it had to do was go up a little bit, and boom, I'm profitable. I remember when I first bought like 11 shares or something, it was in the $11 range. So by buying the amount I did, it brought that average price way down. But I literally bought the dip. There's the dip right there. It's not hard to see. If I go to the 1 month, you can see two different dips here. So these occur on a regular basis. If you go to the 1 year, then you can see all kinds of little dips. All kinds of little dips that you could have been buying at. But you have to monitor this stuff on basically a daily basis. But if you can't do that 2 or 3 times a week, you can still kind of keep an eye on stuff and know when things are at a bargain, comparative bargain. Keep your heart out of it. If you're trying to make money, keep your heart out of it. Use your head. Use the analysis. Use the data that's provided. Do your research. Don't get stupid and put all your eggs in one basket. You use common sense things, and it works. And this My Fun account is proof of that. All right. Well, thanks for watching. If you have any questions, comments, please let me know. And if you haven't subscribed, I really appreciate it, because I'm really starting to build my channel. It's starting to get some momentum, and I'm going to keep making videos as long as I'm getting the response I'm getting. I can't believe anybody pays attention to me. So thank you very much. Hope you learned something.